Yeah. Fantastic. So if anyone's coming into this next session, please do join us. Please do come in. I shall be introducing James shortly. For those of you that in the last session probably know me, my name's Sarah Fitzmaurice, CEO of Executives in Africa. Does what it says on the tin. We are an executive search firm focused on Africa. One of the things the panel mentioned in the last one was that the need for more women in senior management roles in the fintech industry. So that's certainly something we can help with, and we have a number of mandates where we've filled senior leaders into fintechs, payments, that sort of space. So we can certainly try and help you. There is still a minority, but we're working on that, and also through 100 Women in Finance, which is a networking group focused on developing women's careers in finance, which has now come to Africa. So really looking to make a difference in the next sort of 10 to 15 years. So right, so if James is ready, is the panelists ready? Fantastic. So our next moderator for this next session is James Dorey. He is a partner at Lions Head Global Partners. James joined Lions Head in 2011. He's worked with the founding partners to build investment banking and asset management activities across Africa and Asia. He now leads corporate and investment banking, covering sectors such as power, infrastructure, and industry, with a particular focus on the energy transition. He previously worked at Cambridge Economic Policy Advisors in London and PwC in Nairobi, advising European utilities, governments, and regulators on corporate and regulatory finance issues. So we look forward to this next panel. Over to you, James. Thank you.
Thanks a lot. Sorry, those when you read those bios, they seem terribly out of date, don't they, sometimes? Yes. It's been a while since I've been. Actually, it's somewhat relevant. I think the last thing I did in the European utilities space was the liberalisation of the postal market and the death spiral, as it was thought of then, with Royal Mail. So Jonathan Berman is just en route. He will make a fashionably late entrance, I think. The topic today is somewhat provocatively called or centered around what's thought of as the utility death spiral. And I think it's worth clarifying the various interlocking themes that fall out of that. So we as Lions Head, we have an investment business and an advisory business. We're working with utilities on one hand, with C&I businesses, mini-grid businesses, and investors on the other. What we see is not one straightforward narrative, I guess, across the continent. With what we think of as the death spiral, you could argue that several places have been in this death spiral for a while. Let's rephrase the question a little bit. I think that what is the role of a sustainable utility in a decentralized, partly liberalized, maybe decarbonized energy market? And if we think of it in those terms, we can think of it rather less as a sort of fatal or fatalistic story of a sort of monolithic state utility not having a role, to one of how the utility, how the grid can find a new role for itself and enable investment, particularly from the private sector. So what do we, when we talk about a utility death spiral, what are we really talking about? It's concerns around cherry picking prime customers from the utility. It's a lack of balance between supply and demand. And it's failure to deal with grid bottlenecks that arise from how supply and demand evolve before and after that. So there's going to be a few, I imagine that many in the room will be fairly initiated, but for the uninitiated, concepts that we'll weave into this conversation. We'll talk about power purchase agreements, and particularly private power purchase agreements, net metering, where private consumers of power can sell back to the grid. We talk about time of use charges, where there's differential tariffs depending on the time of day. And we talk about, importantly, wheeling, which is the ability to sell your power under PPA through the existing grid's infrastructure. Lion's Head, we don't just work in Africa, so we've seen these issues arise with clients in Vietnam. People look at Vietnam and say it's an amazingly successful C&I private investment story. There's something like 9 gigawatts, I think, operating of C&I, mostly small-scale rooftop in the industrial space, but it's led to a lot of supply and demand imbalance. In Jordan, similarly, there's big timing issues around generation during the day and a lot of surplus renewable energy. And in Pakistan, it's a similar story. So I guess the essay question is, where is Africa on this landscape? So I think first things first, we'll let the panel introduce themselves, and then we'll run through a series of questions that hopefully can shine some light on the topic.
Great. What do I do to get my mic on? Do you know?
Yeah, do you know? Is it just that way?
Check, check. Oh, you can hear me? Hi, everyone. I'm Ryan Levinson, co-founder and CEO of SunFunder. Now, I'm getting some feedback. Now Morova SunFunder. We are a clean energy transition fund manager. We provide debt funding for distributed clean energy in emerging markets, mostly in sub-Saharan Africa. We've been around now for 10 years. We've made about 200 million of loans to over 50 distributed clean energy companies across emerging markets. We were recently acquired by Morova, who is a sustainable and impact asset manager, fully dedicated to clean energy, climate, and other impact investing. And we're currently raising a new $500 million debt fund called the Gigaton Fund. Yeah, really looking forward to this discussion. Thank you.
William?
Thanks. William Brent. I'm the Chief Marketing Officer of Husk Power Systems. Husk is originally a company founded in India 15 years ago by our CEO and co-founder Manoj Sinha, who was supposed to be here today, but is busy raising $100 million, so couldn't make it. So we are essentially a rural electrification-focused company. We build solar-powered microgrids that power communities in mostly rural and peri-urban communities in South Asia and sub-Saharan Africa. We have about 200 microgrids that we own and operate currently in India and Nigeria. The goal is to build 5,000 by 2030. We signed a UN Energy Compact early this year to that effect. Aside from the sort of central business focus of the mini-grid or microgrid, we also provide financing for purchase of appliances, both household and commercial use. And we build turnkey rooftop C&I in the rural communities where we work as well. So it's essentially a three-pronged business based around the microgrid, but also including appliance finance and industrial C&I for rooftop. So that's a brief intro to Husk.
Thank you, William. Hi, everyone. My name is Nyaka Bodji. I'm the founder and CEO of Kauri Energy. We are a spin-off of the Rolls-Royce Group focused on sub-Saharan Africa. We serve two markets as an energy service providers, local energy providers which are serving the mini-grid sectors, and also companies which are exclusively serving commercial and industrial space. So we cover the range of from 10 kilowatt peak to megawatt size, and we really bring some expertise in terms of engineering, supply chain management, working together with local companies so that by doing that, we can accelerate the delivery of project in a faster way, but most importantly, giving time back us as developers so that they can focus on providing service to their end customers, driving revenue in the mini-grid sectors, particularly in rural communities. As William says, really important not to see energy as the end game, but the beginning of the transformation of that ecosystem, focusing on productive use and having people focusing that is really important. Thank you. I'll leave it there for now.
Thank you very much. My name is Liz Williamson. I head up the Energy Corporate Finance business for Rand Merchant Bank, and RMB is the investment banking arm of First Rand, which is, for those that don't know, First Rand is the largest bank in Africa by market cap. And we, on the energy team, have really focused on M&A activity across the energy spectrum. So we look at oil and gas, we look at downstream, we look at renewables, and we look, that transfers into the power sector. So I feel really the unique angle we bring is looking at how both the upstream and the downstream and the renewable sector can really interact together. And that's been something that's really been at the forefront of a lot of our advisory over the last few years.
Hi everyone, I'm Jonathan Berman. I head Autonomy Capital. We are a boutique financial advisor focusing on energy infrastructure and resources in Africa. We currently working in about 10 countries in the region on projects from the largest 1.5 gigawatt new hydro project to very small distributed generation assets. I've been involved in financing the energy sector for 30 years, and my claim to fame when we talk about utility death spirals is I have lent money to utilities that have gone into complete financial collapse, although they were not in Africa, they were in the USA.
Very good. So I wanted to start in Nigeria, in fact. I think, when we think of this topic, attention quickly turns to South Africa and load shedding and ESCOM and the rest of it. But it's starting in Nigeria. I mean, we've long had a vicious cycle of poor service provision, low payment, low investment, high losses, so low payment, and that privatization has not really made a dent in that space, in that issue. So arguably the death spiral has been and gone in Nigeria around the utilities sector, particularly in the discos. How do we, starting with William, how do we break that cycle, and what role? How does Husk put itself into that market?
So I think looking maybe first at India, which is where our company began, is a little bit of an informative example for what should happen maybe differently in Nigeria. We're free to operate in India. We don't need any regulatory approvals to do that. As you may know, India essentially has said that they've achieved 100% electrification in the last couple of years. The reality on the ground is that, yes, okay, they've extended the reach of the grid to the whole country, but it's still quite unreliable and poor quality in many, especially rural areas. So we are essentially we're competing in a weak grid market in India. And we're competing head-to-head with the discos, what they're called discoms in India. And we've still been able to see a compound annual growth rate of about 60% over the last couple of years, despite COVID, despite everything that, all of the headwinds that we faced in terms of financing. And to me, that's just indicative of the fact that, India has also been in the same sort of spiral multiple times over the past, couple of decades. And they're still in that same debt trough, if you will. And they still haven't quite gotten their head around the fact that private sector microgrid operators like Husk actually offer a great opportunity for last mile franchising, where we can serve the customer at that last mile much more efficiently, provide better service, higher reliability, better quality. That hasn't happened yet. It's in the process, I think, it will happen over time. And so move over to Nigeria, where you've got a government that actually has just announced an energy transition plan, and they recognize the role of companies like ours, not just for off-grid communities, but also weak grid communities. So they have an interconnected mini-grid program as part of their Nigeria electrification project, which is an essential component of how they want to look at not just rural off-grid communities, but also peri-urban weak grid communities. So they're already more ahead of the curve as it relates to, or when compared to India. There's a recognition on the part of government and increasingly on the part of discoms to welcome private sector microgrid developers like us into that scenario. But it's still early days, and you're seeing a lot of discoms in Nigeria who are wary, some who are curious, and then a couple or handful that are more proactive and actually engaging with us more on a more proactive basis. So I think it's still, to be determined, what the reality ends up looking like in Nigeria. But you do see already a trend in the direction where it's an integrated system that the DISCOs serving the urban communities, private sector microgrid developers serving peri-urban rural communities, and at some point those things will probably interconnect.
So the key analogy between India and Nigeria is that it's not just an issue of coverage, it's an issue of performance and efficiency of service.
The only reason that we can survive as a company in India is that we provide better service at higher quality, and a lower price if you're a business using diesel, right? So that's our main customer in India. The MSMEs, the small factories that work in the rural, that operate in the rural communities that we're in, they will always choose Husk over the discom there because we provide better service.
I think that theme of competition is going to be a sort of key part of this when I think about how utilities progress through this cycle. Diaka, it's the context probably, I mean, you're in Nigeria as well, but you're also in far more dispersed or less densely populated settings as well. How does Corey's business model differ and service provision priorities differ?
I think the key thing here is two things that William and yourself just said is about services, about competition. So we're seeing the state of the state utilities because there was no competition so far. Now with companies like Cowrie, Husk and others coming into the market, providing decentralized assets, it's helped them to rethink what the positioning should be. We see that in Nigeria with the interconnected mini-grid, but I pass forward also in Senegal where a new law has been put in place actually to unbundle the state utility Senelec between generation, distribution and service. Because at the end of the day, energy to the end user, the consumer, is a service business. So we have to have companies which are really clear on that, really clear on how do I drive demand, how do I use the transformative power of energy to support my end users, build a better ecosystem and more revenue, particularly in area where the income is low. Area like Mali, where we operate, for example, we see that regulation is important. So there is a great state of clear regulation for small companies, off-grid utilities or off-grid energy service provider operating there. Where we come in as Cowrie is we see this market as, of course, it's a nation market. We have good players and good companies rising up like Husk and others, but yet the market is still dominated by small developers trying to do vertical integration, and by doing that, then the process of delivering the service to the end user, which should be our focal point of all of us, take longer and is not necessarily cheaper. So we very much come in as a specific energy provider in terms of service to those utilities, those micro-utilities, those developers by taking a big portion of the value chain upfront in terms of engineering, procurement, and most importantly, the management of the value chain. Because when you are a small company in Africa trying to source in goods which are in China, in Europe, in America, you can see how difficult that is. So we take really that big package and deliver a fully standardized and pre-financed asset, removing the CapEx discussions, obviously, for those projects, for those developers. But by doing so, we help them connect people faster. So the way we work, it's reduced the time to delivery from acquisition to connections. Obviously, we operate in what I call the bottom to the middle of the pyramid when it comes to community electrification. In that space, asset size are smaller. So it is really important to bundle them into a portfolio so that then we have a better purchasing power, not only that, but also standardizing and reducing transaction costs when it comes to financing. We also do operate into the grid connected, particularly in the weak grid with the CNIs and the small and medium-sized enterprise. Again, here is collaboratively with the DISCOs, right, the interconnected mini-grid, and also with the developer themselves.
So, so the competition drives not just cost minimization, but performance maximization.
Absolutely.
And that's how you overcome, because typically as with less density and higher average costs and low affordability, right? Being competitive involves not just the cost of service, but making sure people have a reliable service. I think that's sort of a key theme in Nigeria too. And I guess, Liz, as we were talking about earlier, one of the features of service reliability in Nigeria is in the gas space. I just saw Akinwole from Genesis somewhere walk in as well, talking about gas and gas provision. So, typically when we're talking about decentralized energy, we're talking about the opportunities opened up by renewables and smaller scale renewables, whereas decentralized gas power has been a theme in Nigeria for some time, both on mid-size industrial scale and smaller. When we think about gas supply, there's a second utility element, right? There's getting the gas to plant, and the off-takers have to worry about gas supply. So if you're a power consumer, you have to worry about where your power supply's gas is coming from. How do you manage these risks in a private sector setting?
So it's incredible to me how often, when I spend a lot of time in Lagos and I'll go and meet corporates and they'll say to me, we're thinking about becoming our own power providers, utilities. We just need to amalgamate enough of us to get someone to bring us gas. Then we speak to private power providers and said, well, I need to have long-term off-take contracts to incentivize oil and gas developers to develop the gas capex. I mean, it's a huge issue around the value chain. It has broken because we're talking $1 billion of capex that needs to be spent, and the only way to get that financing is to have long-term contracts with credit-worthy off-takers. And I mean, one of the biggest issues right now for financing that is truly the issues with the Naira and getting money out of country. And all this capex is dollar capex, which is hugely problematic when you're matching that with Naira and basically getting Naira coming in and dollars going out. That's a mismatch that we're trying to, as a bank, address and try to be creative around that. But ultimately, we need credit-worthy off-takers, long-term off-take contracts to really promote the upstream players to develop the gas, and also needs some regulation around that can incentivize the gas capex against oil and gas revenues.
Thank you. So moving on to, I guess, the elephant in the room, Eskom and South Africa, where I think Jonathan said to me last week the death spiral is well underway. I guess looking forward, what does a T&D successor company look like? What does it offer private generators? How does it enable that market? If we think about the end game being some sort of liberalized, maybe even merchant space with decentralized generation and storage, etc. What does a successor look like?
Yeah, I mean, fascinating time to look at South Africa right now. I think for years we've all said, well, South Africa is just different from the rest of the continent because there is a large utility which supplied per capita, power levels close to those of most rich European countries, high levels of electrification, something like 95%. So it wasn't really comparable to the rest of the region. So, and then, as James said, we've gone into this period when everyone's been worried about the financial future of Eskom. It is undoubtedly in a death spiral. That does not mean it is going to collapse. It just means there's going to be a huge, huge check payable by either the South African taxpayers or supporters, financiers, donors, and others to dig it out of the hole it's in. But looking forward to what that means, the transmission company. So Eskom has put its transmission business into a separate legal entity. That's a really important start. It has not yet allocated tariffs and debt to that entity, and that's something we're watching very closely. I would say keep a close eye on over the next few months. There is a consultation process, we know, with stakeholders going on right now. How that comes out will have a huge impact on the market. I mean, simply put, if you load a lot of the debt and tariffs onto that grid company, then 95% of people in the country are going to have to pay for that some way as grid-connected parties. But what's already happened, and it is really quite interesting, is over the past year, the generation market has also been deregulated. So South Africa's had IPPs since for about slightly over 10 years, but they all sold under long-term contract to the utility. And I guess a lot of people assume that because of the high level of electrification, you wouldn't see the same C&I market develop as you have in Nigeria, let's say. But in fact, about a year ago, significant deregulation happened, and there's been a huge volume now of private power projects. So the largest one done, which was just reached financial close a few days ago, is 200 megawatts of private power. And what's more, not even on site for their off-takers, wheeling through the grid. So the projects are in the northwest of South Africa, and they're selling down to Richards Bay in the southeast through the grid, pure corporate PPAs. So that's very interesting to see. And that obviously complements what was happening anyway with the smaller rooftop deals that have been going on for a while. But I think we're still trying to work out what that means for a market. And to answer your question, when those companies I've worked with in the space, if you're doing an IPP, you're going to bid to the government, and you have a sense of where the market is going to be in this bidding round. If you're doing a corporate off-taker in the South African market, there isn't yet a sort of a standard price. And I'd be interested to hear from other panel members how they negotiate tariffs in other markets. But at the moment, it seems to be a whole different series of models that people are using. Some are saying, okay, I'm connected to the grid. They may be unreliable, but what's my tariff from this municipality? And you as the IPP, if you can give me 10 or 20% lower, I'll sign. Others are running competitive process and producing much, much lower tariffs as a result. So I've seen in small solar in South Africa, I've seen tariffs between about 80 rand cents and 150 rand cents. Yeah, which is a massive gap. So I think we're still waiting to see how that market develops, but I think it's going to be very interesting one to watch over the next year.
Some of the financing terms on the larger scale projects are as aggressive as the utility auctions.
Absolutely, including how you take some of these risks of load shedding and other issues on board. So.
Yeah, I think with tariffs, I think with PPAs as well, we see different escalation models. So if people are escalating off CPI or discount to some sort of published grid price. I've seen developers also say, well, CPI has kind of been around 5 to 6%. Let's just call it 5 to 6%. Now, obviously, inflation's gone up. They're sweating right on that. And just coming back to Liz quickly, I mean, what sort of, you're obviously dealing with a lot of different companies in the market. What sort of business models do you think may emerge or have already emerged in terms of distributed storage, maybe grid services, balancing, beyond, I guess, the sort of conventional C&I?
So I think, to your point on South Africa, it's really incredible to see the amount of companies entering the country to provide different models. So we're seeing the subscription model. And we're seeing companies come in from the Middle East that have been very successful, offering just access. You're not going to have to provide any CapEx. We're going to provide you power. We're going to charge you a monthly, yearly rate. And we're basically going to sign you up for anywhere between 5 and 15 years. The biggest trend we're seeing is that the PPA and the offtake terms are shrinking because they have to be competitive. And another one of the key aspects is that big IPPs are now saying, okay, we're not going to do the rebrownds anymore. We're just going to focus on C&I. And it's interesting. So we've just financed the Harmony Gold transaction, which it's also wheeling, and it was 3 by 10, so 30 megawatts. And Harmony Gold is going to be taking part of it, wheeling part of it. So all of a sudden, the wheeling, is providing a revenue stream. So there's an interesting dynamic of how this is changing the corporate model in South Africa. And with all the competition coming in, I think there will be a point where costs come down, but we're also seeing some of the premiums being paid for how quickly you can build private power, and we'll pay a bit of a premium to get it because it's consistent and reliable. To the Nigeria point, it's consistent and reliable, and there's not going to have rolling blackouts. And we do feel like there's a desire by most corporates to have duplication, access to the grid and the private power. The idea of wheeling, not everyone will be able to wheel, there's just not enough capacity for it. But ultimately, the creativity that we've seen in the Middle East is coming down a lot to South Africa, and it's going to be hotly competitive. I mean, it's incredible. We speak to different corporates every day that are coming into the space.
Yeah, and I guess it inverts the logic of this concept of a death spiral being around. You have to maximize coverage, volume, but if you're saying, well, actually, it's more efficient for an industrial customer to in this case, it's wheeling. It may eventually be more efficient for that power user and wheeler to operate part of that grid, right? And then you're actually fragmenting the grid. I mean, it's sort of relevant to the next question in a different setting in somewhere like Mali, where Kauri is. You'd have different mini grids or meso grids, or however we sort of scale them up, take different approaches to private and industrial use. So we have large-scale industry, we have sort of mid-sized commercial, and then maybe even SMEs. I think you're specializing as much as anything in the SME space. How do the considerations differ? How does your business model differ to cater to those sort of customers?
I think it's really important as we serve that middle of the market, not only to serve the SMEs, but also the community. So that's why we have a blended portfolio, right? So really focus very much on community electrification, simply because these are the consumers of tomorrow. 600 million today, 1.2 in 30 or 40 years. For the SMEs, this is their customers, this is their clients. So if we want to support SMEs to grow, we want to make sure as well that they have, customer to serve as they grow. We're seeing a lot of demand in Mali from the SME sectors, so that we've been participating too, because of course of the rise in inflations, given the situation, and also the instability of the grid, like in Nigeria, to a lesser extent, to be honest. But I think there are two aspects happening, particularly in the hospitality business, where we've been seeing a lot of demand, is people are really much conscious of ESG, not only that, but also climate change. So most of that was quite surprising. Some member of our team actually, that people are, the grid price is not that expensive, but they want to have hybrid system coming in, renewable energy coming in for fighting the climate. Because they are the one, actually, you can see it, the rainy season just happened in Mali, where they've been having a lot of floods, so they have to face those consequences. So also in those jurisdictions, we see more and more demand just to balance from the corporate side. So we are playing in there, and we see more people coming into the Malian market, where I think when you say we're operating in Mali, people are always, the first things are rolling their eyes. Despite, level of instability, business is going, because business are coming in, and you have a lot of MNCs, right? Multinational companies in the mining sectors in Mali, which also have asking for more and more systems, hybrid systems. So we've been seeing demand for mining. So this is the range of 5 megawatt, 6 megawatt plus. So while we are really much focused in the middle of the market, but with our partner, we are also able to serve the minings. You were mentioning storage system. You know that the West African power pool is being built. Mali, Niger, and Cote d'Ivoire are in that route of the West African power pool, and at the moment, we are looking at 200 megawatt hours of batteries being put out there for tender to stabilize that West African power pool as we move forward. So you can see that even in jurisdiction where people wouldn't think that demand is coming in, actually very much so we're seeing that from the corporate, but also for the communities. We still 12,000 communities to be electrified in Mali, which is
How many?
12,000 communities. And Mali is a NAMAP country for the African Development Bank. So African Development Bank, CFA, has focused in 10-ish countries, where they see that really we need to put a really focused effort on that. And obviously, to be able to deliver, you have to have a volume. So we've been in discussion with them to say, you don't want to take one community by a community, but you want to look at the volume. We're talking about at least one round of 100 communities and etc. So 12,000 communities are still, and this is an agriculture hub. They export cotton, they export gold. So when energy comes in, revenue is not what we are worried about, because the ability for those communities to capitalize on that energy is massive.
Yeah. I must admit, I wasn't expecting to be able to draw a line between the Vietnam story and the Mali story in a way, but the climate consciousness of multinationals has very much been a big driver of the C&I market in Vietnam as well. So I guess linking to that, turning to Ryan, on one of the most bankable models within the C&I space has been energy service companies providing or displacing diesel generation for mobile networks or telephone grids. It applies to sort of the Sahel, in Semak and Yumo, and all over the continent, these models. Why are these opportunities attractive to lenders, and where do you see that space going from here?
Yeah, so financing the solarization of telco towers is one of 5 segments where Merova Sun Funder is currently very active, and it's probably one of our 2 fastest growing areas of work right now. One, there's just a massive opportunity with tens, if not hundreds of thousands of telco towers around the world powered by old, dirty diesel gensets. So solar and storage is, an ideal solution to displace those diesel gensets. What we like about it is you have really strong creditworthy off-takers in the telco companies. You have long-term contracts with reliable, predictable cash flows, which of course is really important from a lending perspective. And then from an impact standpoint, we love it. It's a really great and important way to reduce GHG emissions. And also, I think, really good to provide more reliable interconnectivity and telecom services to communities.
And these business models can go beyond just the telco infrastructure itself. Can they plug into mini grids? Can they be an anchor for mini grid projects?
That's exactly something we're starting to see, although we haven't directly financed that yet. I think that's what's coming. But that's exactly what we're starting to see some companies work on is, looking beyond just the telco tower and use those towers as an anchor tenant for some mini grid opportunities.
And maybe a question for everyone on the panel in turn. I mean, where do you, given all of this, and whether a lender, sponsor, or raising capital in the sector, where do you see the so-called utility death spiral creating risks for your businesses, for your clients, insofar as does it create danger of regulatory pivots, or are you becoming reliant on wheeling as a service? Where do you see those risks being generated?
Yeah, I think it depends on the project, but for example, if you're looking at a C&I project, I say eventually going to rely, and I say eventually because you haven't really seen many of these policies start yet. But in the coming years, I think we're going to start seeing some net metering policies take hold in Kenya and Ghana, hopefully, and that's going to create huge opportunities to start to scale up the C&I sector. But you have to really understand the rules and the regulations really well, and it creates some policy risk as well. So, if the utility that's involved in that policy is struggling, that could, also create risk.
Yeah. William, from your perspective, what are the risks?
I mean, we see it as an opportunity, not a threat. Of course, we want to see a successful, vibrant grid and utilities in the countries where we're operating as well. We're not going to be able to serve everybody, obviously, and they best serve, a large portion of the population. But if things continue to worsen, or the discos are struggling in the markets where we work, we see that as an opportunity for us to prove our value even more. So that's again, I don't want to see that, but if that's the eventuality, then it's good for our business. Right. Yeah. We grow faster and stronger.
Yeah, probably similar story for...
Yeah, I mean, we have a collaborative model, so the utilities or state utilities and national grids has a big role to play, and they will continue. Also, they're having always challenges. I don't see them going anywhere. In the country, I think they are starting to reform themselves, to change because of the pressure from the decentralized energy. I think what I would like to see is that change process being a bit faster so that we have clarity, because clearly in the C&I space, in the bigger space, let's face it, we're eating their breakfast. So they will wake up and it can go left or right. We're seeing something happening as we speak in Senegal with the change of the electricity law, which is really good in terms of clarifying which each player's place, particularly in the mini-grid sectors, that around self-consumption, as they call it, which is CNI, there is a bit of doubt. So most projects have paused to clarify what is happening in there. You know, can people really come in as a lease-to-own model? Can they do PPAs? Can they do IPP? Yeah. So the CNI model has a bit in that country because of the change in regulation. I think it's good to have the regulation coming in, regardless in which direction it goes, so that we have that clarity. So as long as we have clarity, I think, as a business, stability, as William said, we see a lot of opportunity in the market, because at the end of the day, we do not believe there is enough player anywhere in the market. So we want to see more players coming into the market to cater to the demand which we are facing.
So I guess from my space, because we have our clients as a bank are energy consumers and energy producers. So from a consumer perspective, it's a positive outcome in the sense that that means that their access to energy has increased. That probably means the operating costs and have gone down, because it's such a big component, especially outside of South Africa, of there's the power to produce their products and the requirement of energy. So that would be a positive for some of our kind of consuming business from our kind of corporate CNI producing clients. You know, it's a risk that the pressure to do shorter and shorter PPAs is potential that in 5 years' time, when that PPA comes to renewal, they will have to accept a lower tariff. And that's something that they're doing now to become competitive in the market. That's predominantly in South Africa. But, you know, so it's a balance. But ultimately, for a lot of corporates, it's opportunity.
Yeah, I'll just pick up on that regulatory pivot question, James. I'm actually quite encouraged so far how little negative regulatory pressure there's been. And I think back to the early days of mobile telecoms in Africa, where there was, first of all, you know, fixed line incumbents did try to stall them, or governments started to try and say, people are making too much money, how do I get my hands on that money? Maybe because the nature of the distributed energy business is you don't have these mega players yet, your Vodacoms, your MTNs, your Bhartis, who are easy targets. That as far as I can tell, there's been less attempt to sort of, either from the utilities or the governments, to stall the small-scale stuff, and long may that last.
Although I imagine that yield compression is a challenge in some of these markets. So equity investors have to be making returns at some point to make that an issue or to get to scale. So we're kind of towards the end of the allotted time. Oh, we're done. Okay. I was just going to... No questions? Oh, there's the bell. Okay, well, in that case, thank you to everyone on the panel. Hope that was a useful discussion for everyone.
Fantastic. Thank you, James, for that was wonderfully moderated, and thank you all for your input. So if you can make your way down off the stage and to the back, and they'll help you get rid of your microphones. Thank you all.